What is up, traders? Welcome back to my channel. Today I'll be talking about a very powerful strategy that I have used and has been so powerful. Like, it has made me increase my win rates. It has also increased my risk reward ratio. Okay, it has increased my risk to reward ratio. So this strategy is a strategy I call don't risk more than one candle. Okay, not risking more than one candle. That's just what I can call the strategy, because that's what it is about. How to take a trade and make sure that every trade you take does not risk more than one bar, more than one candlestick. Okay, that's what I'm going to show you now. Any trade you take will not carry a risk that is higher than one candlestick. That is just what I'm going to show you. So pay close attention and smash the like button, turn on the post notification bell, and subscribe to this channel if you are new. Okay, check the description box. Also, you are going to see a link to my Telegram channel, because I use this strategy to bring signals and post in the channel, free signals, free chart setups. Also, I do post them on daily basis. So I'm going to teach you this strategy, how you can only risk a single candle in every trade, whereas you are targeting tens of candles in that same trade. Okay, so that means if you lose a trade, okay, that means if you lose in that trade, you are losing only one candle. But if you win, you are winning multiple candles. Let me show you how this strategy works. Okay, so in this strategy, you are required to have two indicators. Just two indicators, as I have here. You can see I have two moving averages here. This is the 50 moving average. These are the moving averages I use, and this is the 200 moving average. Exponential, both of them are exponential moving average, right? Take note of this. The 50 exponential moving average and the 200 exponential moving average. These two moving averages are the only thing you need. Okay, you just need them, and this strategy works on all time frames. All time frame, from the 1 minute time frame to the daily, monthly time frame. Okay, so you can choose any time frame. Sometimes I prefer to choose the lower time frame so that I will, see more trades. I'll take more trades. And when I don't want to stay in front of the screen too much, I just go to the higher time frame. When I see a signal, I take the trade, set my stop loss, set my take profit. Boom, I'm off. I go to mind other businesses, and then when I come back, you just see the result almost predictable. You know how much you're going to lose, you know what you're going to win. Okay, so after you have placed this your moving averages, the next thing you want to get is your fractal. Okay, so you go to your indicator. Okay, look for fractal, right? Okay, so Williams fractal here, this is it, right? So okay, let me see. So this is the Williams fractal is what we need. Make sure you get the Williams fractal, because it is very important in helping you, make the right target. It's going to help you to make the right target. Okay, so always use it. Very important. Okay, so here I have my fractal. You can see this small dots. These small dots. Okay, these small dots below and above my candles. Okay, so they show you the swing highs and the swing lows. Now, when you are setting your stop loss, if it's a buy, you set it below this fractal. Okay, then if it's a sell, you set it above the fractal. That's just it. Okay, so how do you look for this now. How does this strategy work? How it works is this: you have your moving averages, okay? So you want to first of all look at where price is rejecting. We have these moving averages here, okay? You can see here, price 50 moving averages, 50 moving average passed through it without any rejection. This is how it works now, without any rejection. Then came to the 200 moving average. You can see what happened here. We got this rejection here. We got this rejection candle. This is a rejection to the upside. Remember, when price is coming down like this, you want to see a rejection to the upside. Once you see that rejection to the upside, you just do what? You buy. But price is going up like this and you see rejection like this to the downside, you want to sell, right? Now, where do you sell? You want to sell at this candle here. Okay, now this is a bearish candle, which means this will be the close. So when you see the close here, that is where you want to click your buy, because it is at the close of the candle that you do what? That you take your shots. So at the close here, that's where you want to make your entry. Then below this fractal, that's where you want to place your stop loss. You see, this strategy is such that you only risk a single bar, nothing more. You don't allow yourself to risk more than a single bar. Don't allow yourself to risk more than a single bar. That is the rule of this game. This will help to keep things in check for you, okay? This will help you not to lose much whenever you are wrong, because trading is such that it's a game of probability. You will not always be right, okay? There is no way you can always be right, and there's no way you can always win. So, but proper risk management will help you stay profitable. Okay, so this one here, let me show you something. Just stay with me, guys, stay with me. Okay, so we are going long here. This is our entry here. This is our entry at the close of this candle here. Then this is our stop loss here. Then you can target the previous high. You can target the previous high. You can decide to even go higher, right? Sometimes I just target the previous high when I'm not going to stay around. But if I'm going to stay around, I use trailing stop. Okay, so here we target the previous high here, and look at it, guys. Look at it. You can see it was smashed effortlessly with very tight stop. And this is what, let me check the reward, the risk reward ratio. This is let me see, this is about 1 to 12 risk reward ratio. My goodness me, 1 to 12 risk reward ratio. This is amazing. This is amazing, guys. This is amazing. Can you see this? That is how this strategy works. Now let me show you guys another example. Let's look for another example. We're going to see now, for instance, look at this one. For instance, price came here. You can see, okay, so price was coming up here. You can see how it got rejected here. Okay, now let me see. You pull out your two, then you want to take the trade. It got rejected, and then this is the closing point here, because this is a bearish candle, so this is where it closed. This is where it closed. Then your stop loss should be above, on the top of the fractal. The fractal is just there to help us, measure the gap we give between the candle, because we know that sometimes you just need to give a little gap because of stop loss hunting. Okay, then you want to place your what do you call it? You want to place your stuff. You want to target the next low, right? The most recent low. Now look at it. You see, we targeted the next low, and we take profit. This is 1 to 3 risk reward ratio. Very easy. Very easy, guys, very easy. This is 1 2 3. Okay, I'm just trying to get it right. Yeah, this is it. Targeted the previous low, the most recent low, and then 1 to 3 risk reward ratio. Very easy, guys, very easy. Now this is another one. Price broke up here, you can see it here, guys. There are a lot of like this happens almost every time. This is it here. This is where we got the candle close here. Okay, so this is the fractal here. Oh shit, this is where we got the candle close, and this is the fractal. Just place it at the bottom of the fractal, and then you target the most recent high, and then this is giving us about 1 to 5 risk reward ratio. 1 to 5, you see, and our TP was hit very easily, guys. When it breaks, now look at this, guys. If it's coming from below, and it breaks the 200 moving average here, the next target you want to have is the 50 moving average. But if it's coming from above and it breaks, just anyone that is below, look at this here, the 50 is one that is below here, it breaks it, you want to, and went above and went up here, you see, you want to target the 200 here. It did not break, it did not react, it did not reject, it just went up again and then started coming down, rejected here. So you do what? You take the trade here. Then went up, it came here, it did not reject, came down here, this is it, you could have bought. So that's just it. That is it. You see, as price is trending like this, once you see the signal, guys, don't be afraid to take it. Don't be afraid, don't be scared. You keep seeing it look at it here again. We had this happen here. Want to take here. So this is it. Here we had this. So you must make sure that you see the rejection. You must make sure that you see the rejection. That is the most important thing here. You must make sure that you see the rejection, and it can be around it. It must not be exactly on the moving average. It can be around it, because the moving average is just like a zone. So look at it here, the same thing here. Okay, so you see, it will be difficult for price to hit your stop loss. Look at it. Once you do it right, guys, it will be difficult for price to hit your stop loss. This is it. You can see our TP was smashed here also. This is it. So sometimes price can play around. When you see this, you can, the more it plays around, the more you want to even enter more. Look at this one also. Price still came here. Look at it, guys. Just see this. Price still came here, and then it was rejected. This is it. It was rejected at this point. This is it. With this bearish candle, it was rejected, and then make your entry. This one was too tight. Wow. This is it, and then your target, the previous high. Your targets, or you can decide to use trailing stop also and trail it, and this is it exactly. We hit our TP, guys. This works like magic. I'm assuring you, this works like magic. The same thing here, you can see it also happened here, again. Okay, just look at this one here. We got this bullish engulfing pattern here. This is a bullish rejection here. Look at it, guys. Okay, this is where the bullish candle close here. So these are entry points, and then these are stop loss here. Then this is your target. This high is your target. Now you can see price smashed our TP very easily, and it is 1 to 4 risk reward ratio. 1 to 4. Look at it here. You can see this 4 here. It simply means 1 to 4 risk reward ratio, right? So it's very easy, guys, very easy. And right there we had another opportunity here. Look at it here also. Look at it here. We got the signal here, and then make your entry here. Yeah, stop loss here. Okay, trying to get it. Is it? And then target the previous high. Boom! We still hit our target. This is it. So it works really well, guys. So this is just use a strategy, go and make money, guys. Stop losing in the market. Stop giving Deriv money. Stop giving Deriv your money. Use this strategy, go and make money for yourself. Go and make money for yourself. Now look at this one. Look at this one here. This is another good example. It's another good example. This is trading view. Okay, really good for analyzing the market. Okay, look at this. Let me show you this one. It's a very good example here. Got it here. So we got this rejection candle here. Look at this. Okay. Yeah, so we got this rejection candle here. Exactly at this point. So this is it. And this is where you want to place your trade here. Then you want to bring your stop loss here. Then you want to take your target here. Yeah. Okay. In this case, I would have targeted because this is too low, and maybe I might have opened multiple positions here. So I will. Okay, let me just see. Is it? I would have targeted. If I make my entry here. Sorry guys, I'm doing this on my phone, so you know it's very tiny. That's why the whole you're seeing the whole delays. So this is it. Okay, please oh shit. Yeah, place your stop loss there. Then target. You're going to target. This is where I would have targeted actually. Maybe I will first of all open multiple trades. I will open multiple trades. The first target will be somewhere here. The first target will be this previous high here. That will be my first target. But I will still have to open more. That's what I would have done. That's what I do most of the times, even. Okay. So okay. It's really problematic. But this should have been the first target. This should have been the first target. I can see it got smashed, and then after it got smashed, even immediately I enter this one, I would have also entered another one to target this low, because this is the where you have the main high. Okay, this is where we have the main high here. This very one here. This is where we have the main high. So we have the main high here. This is the main high here. So this is where I would have targeted. Okay, so which means by now I will still be on the trade. That's what it means. By now I would have still been on the trade, and believe me, it's going to hit TP here, right here. This is going to hit the TP. You can see how it's moving very smoothly, and you can see the risk reward ratio is so impressive. We have 10 risk reward ratio. 10 guys. 1:10. That means you're losing one, you are risking $1 for 10. You're risking $1 for you're risking just $1 for $10. That is amazing. That's amazing. So that is how this works. And I'm going to have this, I'm going to post this on my Telegram channel when this one finally hits the TP. I'm going to post it on my Telegram channel. So guys, I believe this is understood. If you have any question, don't forget to ask me in the comment box below. And if you got something from this value, if you learned something from this, from this video, please don't forget to drop your comments in the comment box. Don't forget to like, and don't forget to subscribe to my channel. Check the description box. There is a link to my Telegram channel. Join our Telegram channel, join our community. There you can reach me directly for account management, for mentorship, and for to get my robot or my custom indicator or whatever you want. Just reach me directly, ask me your questions, and I will answer you almost immediately. Okay, thank you guys for watching. Bye.